Good morning, welcome to IG's early morning call. It's Monday, the 13th of February, as we await what looks to be a mixed to lower start across the European equity markets on this first trading day of the new week after last week's trade, which saw the worst week in around about 2 months on Wall Street especially, but there was some weakness across the European equity markets as well. Let's take a look at the volatility markets to check in to see just what's happening in terms of some of the moves in terms of risk markets. And you can see that after Friday's shooting star type candle, where we saw it approach and almost close at levels not seen since the 19th of January. In fact, we were at 19th of January highs, indicating that there is risk off the table. That being said, we're now, where are we, 22.10 at the moment. You can see we're above the body of Friday's candle, but still below the highs that we saw on Friday. So I think really the markets are just treading water until we find out more this week. I'll go into some more detail about what it is we're trying to look for this week in terms of some of the moves. But earnings are beginning to start to slow down. Let's look at what's happening across the European equity markets. You can see London at the moment, there's a green candle here, and in fact we are at 78.92. We're above the point we're at where we closed out on Friday. So I was talking about a mixed market at the start in half an hour's time. This is one of the outliers, and it's one of the better performers. The London markets, at the moment at least, looking as though we could well see gains at the start of today's trade. There aren't any major stock stories that are leading the move in the session in today's trade. But across the European continent, a little bit of a different story, building on the downside, 15,305, the German DAX. In terms of direction of trade, if you were to take a position here, your stop would go above the entire wick of Friday's trade at 15,500 if you're short on the German DAX gain at the start of today's session. I'm not looking for massive declines at the start. It's just a little bit of weakness we're monitoring at the moment. You can see the MACD pointing down, indicating potentially that people are looking for good reasons to try and sell this market, perhaps maybe at a better level. So if you might see a little bit of a rise, you might see more people trying to sell into this. But at the moment, at least, I think the softness looking as though it could well pervade across the European markets at the start. We have a green candle body here on the French market, but we are still below the point at which we closed out Friday's session at 71.33. So a little bit of downside there as well. And same sort of direction of travel in terms of the momentum. But that's the picture that we're building at the start of today's European session. Let's look at what's been going on in the Asia Pacific markets. Let me just run through some of the trading day that we've seen so far there. 24-hour markets on the IG platform. We're currently down 0.25% on the Nikkei 225. The market's closed down almost 0.9%, down some 243 points on the session in today's trade. Wasn't a big move when you consider we're talking about 27,500 points. But you can see here we continue to be overshadowed, I think, by this falling line of resistance that we've got. When was that high point we saw recently on the 6th of February, well below the previous highs? So you can see these lower highs pervading. And in fact, in today's session, we've seen the lowest print we've seen in this market since the 1st of February. And indeed, just bouncing off the 200-day moving average at 27,257. We're currently trading at 27,463. And as I said, it's been a negative day today. So we're building on that there at the moment in the Japanese markets. In Hong Kong, we're very close to the levels that we saw where we draw this line at 20,680. It was the high that we had back on the 29th of August last year. And that is an interesting point of support potentially. When we passed above that, we saw a very big candle, a very strong day that was rising to the highs on expectations that the unlocking from China's zero COVID policy could well see demand pick up this year. Now there's some question marks about all this. And we'll take a look at some of the reasons in just a couple of minutes' time, especially when looking at US interest rates, which I think could well surprise on the upside. And as a result of all this, we've seen that drop down in the Hong Kong Hang Seng Stock Index. We're still trading on the cash session at the moment. We're currently trading up just 6 points, a rise of 0.03%. So it's a tiny rise in terms of the cash session today. But on the 24-hour markets, we're up 1.25%. Australian ASX 200 closed down on the session in today's trade by a margin of 0.21%. But we're flat there on the 24-hour markets on from the close that we saw out on Friday. 74.29 is where we're trading on the Australian benchmark. Let's look at what's been happening on Wall Street, just to remind ourselves as to what happened on Friday, where we saw the entire well, we saw the Dow and the S&P rise. Actually, we're up 0.5% for the Dow, S&P up 0.25%. But the real action coming on the Nasdaq because of what's been happening in terms of expectations on US interest rates. And you can see actually on Friday we dipped below this line of support at 12,258 briefly on Friday, and we've done it again today. That line of support was established with this high point we had back on the 13th of December. And I think this is where the real problem is lying. US stock futures were down last night, expecting a lower start to the US session today after the S&P and the Nasdaq ended their worst week in nearly 2 months last week. These losses coming after the Federal Reserve Chairman Jerome Powell said that there's still a long way to go in the fight against inflation, indicating potentially more upside to interest rates than the markets are predicting. Powell also noted that interest rates could rise more than the markets anticipate if inflation numbers don't abate, reversing some of the prior market optimism that rate hikes would soon ease. Now, all this is tied into what's happening with the US dollar. And as we saw on Friday, the US dollar rising and closing stronger. And in fact, we closed at levels pretty much not seen since the 9th of January. And we're building on that sort of high position at the moment there today on expectations that the inflation data, which is due out tomorrow, and retail sales could come in stronger than expected. Well, certainly inflation could come in stronger than expected. And that's a worry to the markets. You can see in today's session for the euro-dollar trade, we've seen the lowest print there since the 6th of January at 106.88. So this move down for the euro is indicating that strength for the US dollar. That move is not so pronounced for sterling, which is sidelined over the last week, flatlining at the 120.65 levels, but sterling holding above that 120 level with some margin there to spare. Now, let's take a look at what's happening in terms of some of the corporates. There's no major news out here in the UK to follow from the RNS that I can see, but I do want to highlight one company due to report earnings this morning. That's Avis Budget, expected to report before the US markets get underway today. Fourth quarter earnings per share at $6.81 and revenues of $2.69 billion. Now, this trades on the US markets under the ticker symbol CAR. I've got a chart here to show you. On Friday, we saw the second day in a row of declines, relatively hefty declines as well. 477 is where we're going to open today, $214.77. That will be where the company starts trading today at 2:30 after the release of those earnings. US earnings this week, including Coca-Cola, Airbnb, and then on Wednesday, we've got AIG, the insurance giant, after the markets close. Kraft Heinz and Cisco also reporting Wednesday. And Thursday, Applied Materials and WeWork. Just want to show you the chart of one other company worth watching today. This is the Meta chart. It'll open at 9 o'clock this morning when we get the first trades, all sessions on the IG platform. And it will be in response to an FT report this morning that says that Meta has delayed finalizing multiple teams' budgets while it prepares a fresh round of job cuts. Mark Zuckerberg's plan to contain costs, of course, we saw released just a few weeks ago in his year of efficiency. And this is causing disruption at the social media company. It comes as Meta, which owns Facebook, Instagram, and WhatsApp, is planning a further round of job cuts. It dismissed 11,000 staff, about 13% of its headcount in November. Zuckerberg announced earlier this month that the social media company would continue to bring its costs under control in his new mantra of the year of efficiency. And this is this massive candle that we saw here where the stock was up about a quarter of its entire value, and it continued to build on that, going all the way up to the highs that we saw at one point at $197. And that was the highest print that we've seen in this stock since the 7th of June last year. And that was brought about by this turnaround at the senior management of the company to try and abate some of these costs. But we'll have to see how things open at 9 o'clock this morning. If it turns out that the FT reports are based on what the company can confirm, then I suspect we could well see some further upside. 174.25, the stock will open at 9 o'clock this morning on the IG platform. Just staying on some of the charts, just wanted to show you what's happening after a really good week last week for the price of oil. A little bit of a pullback into today's session at 85.45. I think more importantly for the idea about the fact that we got this strong dollar is that we're continuing to get weakness in the gold price. Look at the direction of travel on MACD. The momentum really down on the downside, and at 80,063, the line of support to watch out for is down here, which was quite sure exactly. I've got that here because of the high point we had there at 1833. So that's certainly going to be an area of interest to watch. I think if we look at on the downside, if you're short on this, would be a price target. If you were short on gold, expecting the US dollar to keep rising. That's it from me. We will be back at 10:30 with Charting the Markets. Waiting to start today's European session. Still looking for gains across the London markets, but only small gains. But some easing back into some of what we saw at the back end of last week across the European continent.
For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.